Welcome to our relocation series on how to move to Australia. Today's topic is around buying a house, and we have the pleasure of talking with Adam Kingston from Australian Expat Finance today. Adam is going to walk us through some aspects of the market here in Australia. Adam, welcome, and thank you for giving us your time this afternoon. Would you like to tell us a little bit about yourself?
Thanks, Leona. Okay, so yeah, my background, I'm an expat myself, so as in I'm originally British. I moved to Australia in 1997, quite a while ago, and have been here ever since. So I've lived in Melbourne, lived in Sydney. For the whole of my career in Australia, I've worked in the financial industry in totally different roles and in different positions. This business was started just over 5 years ago, which was specifically a finance business to provide options and solutions to expats who are living overseas. We were very fortunate when we started the business that the big four banks, who all had branches in Asia, closed them in the first 12 months. So our major competition all got out of the industry. So yeah, so that was kind of how the business started. That was the objective of the business, and it's grown from strength to strength since then. We have clients in every continent in the world. So literally from clients in Buenos Aires to both sides of the States, Canada, I don't know how many countries in Europe, Middle East, all the way through to most of the major centres in Asia. And we also do loans for people onshore, but the majority of those people are actually offshore.
Yes. Yeah, that's cool. You must be similar to me and spend a lot of your time on the phone at odd hours of the day.
Yeah, it's generally not too bad, that we can operate within sort of 6 till 6, if you like. But yeah, probably the biggest change for me over the last 12 months is the lack of travel and how the business has evolved and changed over the last 12 months. So from going from spending a week on the road every 6 weeks, so usually in Asia every 6 weeks, to not, has been a massive change. And yeah, that took mentally and emotionally quite a lot to get used of. Because I enjoy it. I enjoy traveling. I enjoy spending those times. I enjoy catching up with friends, with family, with clients. Most clients end up being really good friends over there. And yeah, it's been a different time.
Yeah, it certainly has. And that's quite a good segue to my first question, which was obviously 2020 was an interesting year for the entire world. I just wondered, what changes did COVID bring to the Australian market, in your opinion?
From a debt perspective, there were bits and pieces. So there's not really been anything massive from a legislation perspective or lenders doing different things. But from a broader perspective in the market, the biggest, most number one thing that has happened was the market was closed. So the property market was closed for such an extended period. Brisbane obviously not quite as much as the other markets, but Sydney was closed down for a long time, and Melbourne would have to have been closed for, realistically, it probably was only open for a couple of months of the year. And you have all of that delayed transaction that really does affect people. So if you stop the market and you close the market, not only do you have people coming back into the market, but you've also got the people who would come in normally. So that's been a big driver of where the market is currently. Yeah. Another factor in there, I think, that's been quite massive, and I've seen a couple of studies on this, but just really high level, short studies, and a few people giving opinions, and that is how technology has accelerated the change of the employment habit of where you're located. So we have so many clients who are, I actually have just come from a meeting this morning with a client who is employed by a company in Los Angeles, and he's just bought a house on the Gold Coast, and he's been living for 12 months in Brisbane. Nice. But is continuing to be employed by the company in LA, and I have clients that are employed in San Francisco, living in Sydney. Some in London that are employed in London, but are actually living in Sydney as well. And others in Asia that are employed in, either Hong Kong or Singapore, but are back here at the moment. So, and seeing more and more of that. So more and more employers are willing to allow their staff to, work from anywhere in the world, and longer term agreeing to the fact that they can. So I'm seeing people move from Sydney, where their office is Sydney, and they're moving to the Sunshine Coast.
Yes.
And they're saying, I have to be in the office for 2 days every 3 weeks, so I'll get on a plane and I'll go. But I actually want to live here with my family. So we're seeing a huge, huge transition there. And obviously COVID has been the catalyst of that, but the technology of Zoom and other technologies has really, really accelerated it. It'll be interesting to sort of see, there's been a couple of little things I've seen on it, but when you see this is probably accelerated by 10 years, that movement in 1 year. So huge, huge change. And we'll see where that happens. I touched on it. Sorry.
Conversely, we're both in Brisbane and have never actually met in person.
Yeah, I know, it's quite funny, isn't it? And I actually had a meeting in Sydney the other day with a guy that I've worked with for 2 years. And it was like meeting a long lost relative, because we chat 2 or 3 times a week, but we'd never had a face-to-face meeting because of those issues. So so it is very different. As part of that, people working remotely and working from home, we're seeing a lot of people wanting to upsize their house. So going from a 2-bedroom to a 3-bedroom, 3-bedroom to 4-bedroom, 4 to 5, whatever it is, or I live in a household where 2 of us work from home, so we need 2 separate offices, because otherwise, you can't do things like this, and you can't be on the phone and whatever else. So the house needs to be big enough to have totally separate areas, because one of us, which is not me, tends to be quite loud on the phone, so that can be quite distracting. So there's a whole range of different factors that come into the equation. So and obviously the number one ultimate reason is affordability. So interest rates for an owner-occupied loan are sub 2% in some cases. For an investment loan, sub 2.5%. So when interest rate is that low, you can go and buy an investment property and it can be cash flow neutral from day one. So we're seeing people buying in locations that were historically, that have moved massively, but the rental market is non-existent at the moment. You can't rent properties. So if you buy a property and you want to rent it out, you're going to get a really, really strong yield. And, particularly in Southeast Queensland, we're seeing yields of 5%. When you've got a yield of 5% and an interest rate of 2.5%, that's good investing. So you can see that continuing.
Have you seen any changes yet? Obviously, the last 6 months or something, it's been quite a movement from south to north. So a lot of Melbourne moving up here. I read somewhere the other day that there was a bit of a trickle of people heading back to Melbourne. Have you seen any of that yet?
Yeah, I haven't seen anyone moving back, I've got to say. Not sure I would, but having come from Melbourne myself, there's no way I'd move back. But not from any other reason. I just love the climate and the lifestyle in Southeast Queensland. So, but statistically, if you go to the Australian Bureau of Statistics, and you go back as far, it was about 2 years ago, they said that Southeast Queensland, which was basically the Sunshine Coast to the Gold Coast and everything in the middle, Brisbane in the middle, Greater Sydney and Greater Melbourne were all going to grow by 1 million people over an 11-year period. And we're in that period now. So we're 2.5 years in. Now, when you drilled into that, you actually saw that through those statistics, Melbourne's immigration and Sydney's immigration was all international migration. So it was people moving from other countries into there. But Southeast Queensland's was very different. And I think the numbers were about 70% was migration from Sydney and Melbourne. So that migration has increased, not decreased. So Queensland is very much on target for that increase and to hit that sort of $1 million people probably sooner than it would have normally, because people can work from different places and they don't have to work in the centre of Sydney anymore, and they want to have the lifestyles and everything else. So I think you'll see that. The interesting factor will be over the next, say 12 months, 2 years, when we get through the vaccinations and the international border starts opening, is how the Australian government reacts to try and restart the international migration to Australia, because Australia needs international migration to grow the country, to keep the numbers working. For all the economic reasons, we need that. There's no question. Australia doesn't achieve what it achieves without international migration. So, it'll be interesting to see if we see new visa types, the accelerated approval of visas. It'll be an interesting period because they have to restart it.
Yes.
And they have to restart it quickly.
Interesting you say that as well, because prior to COVID, there was a lot of emphasis on regional visas. But now there's such a housing shortage in all those regional areas that maybe they will need to come to Sydney and Melbourne, because everybody's vacated. And regional.
Try and getting a tradie in Sydney or Melbourne at the moment, because there's so much government spending on infrastructure, on housing. So all the tradies and subcontractors are working in for government projects where there's multi-billion-dollar projects to build housing in the middle and outer suburbs. That if you lived in your 3-bedroom house and you said, I'd rather extend my property, you can't find a tradie to do that at a reasonable price. And if you can, it might take a year for him to even start the project. So what do you do in the meantime? So, whilst yes, the market's moving, and if you consider the cost of moving house, particularly in those 2 states with stamp duty is considerably more than South East Queensland, then there's lots of factors.
Yeah, definitely. I know a lot of British tradies who will be very excited to hear you say stuff like that, though. Definitely, Sydney and Melbourne still been quite high up the list of places they want to move to, I think. So, as an expat coming over here, is there anything they need to be aware of here around what might be different about how to borrow here, or anything that's sort of changed around the borrowing regulations around maybe COVID?
Good question. It depends on timing. So at what point, if you're migrating to Australia or you're repatriating to Australia, do you actually buy a property? So if you're an Australian living and working overseas and you're considering moving back, in that situation, most people buy the property before they come back, and they may rent it out for a year, and then they'll move into it as their owner-occupied property, and the property becomes owner-occupied at that point. Whereas if you're a migrant and you're coming over on a visa, so you're granted permanent residency, the tax system makes it very difficult for you to purchase that property before you get here. Obviously, and it's actually quite hard to actually purchase a property when you're not in the country, because you may not know where you're going, etc. But the situation, I suppose, is a hard one. And even for Australians living overseas, there's so many people that I speak to and clients that I have, when they are overseas and they're building a property portfolio or they're buying a house, and not many people actually know where they're going to move back to. They say, okay, well, historically it used to be, I'll move to Sydney or Melbourne because work will move me there.
Yeah.
Whereas now they're actually looking at it and saying, well, even if my office is in Sydney or Melbourne, I could still live on the Sunshine Coast. And that is far more attractive to live on the Sunshine Coast than it would be in Sydney and Melbourne, and far more cost effective. So, there's no right or wrong sort of methodology there. And quite often the decision is based around, from a tax perspective, what you're able to do. So very, very difficult to get debt you're very much, even if you've got permanent residency, if you're trying to buy before you come back, there's quite a lot of tax implications of that. So you pay foreign investor surcharges and things like this, and you'd be limited on property types. So lots of issues.
Yes, and the stamp duty is higher as well, isn't it?
Yeah. So you got the stamp duty excess, which obviously is different in each state. So.
Yeah, as a recent buyer myself, I did feel there was a little bit more scrutiny as well on whether you'd been COVID affected in your job as well. So
yeah, absolutely. There's most lenders have their own COVID questionnaire now. We've recently had 4 applications that have luckily all been approved for pilots. Now, can you imagine the questions they ask of a pilot? Now, fortunately, in all 4 cases, the pilots were flying for Cathay Pacific, which has been massively affected. They just posted a $2 billion loss, but they've actually been very, very fair to their staff. But in all 4 cases, all 4 pilots in this, they fly freight, so they've not been busier, and they're flying all over the place. So they've been totally unaffected by this. But yeah, in all cases, we had to do extremely lengthy notes to explain initially, because you can imagine an assessor looking at an application for a pilot and just saying, pilot, right, okay, how's this going to go? So yeah, it probably shows the value of the explanation. Answer the question before it's been asked, if you like, is our ethos. So yeah. Work out what could be a potential red flag, what is going to be a question that an assessor is going to want an answer to, and actually answer it before you ask the question. So take the process.
Looking for it, I guess.
Yeah, absolutely. Because you know what they're going to ask. COVID's a big one. Certain industries, not so much in other industries. So there's always a high level, yes, we've not been COVID affected. And you can see that through this and this. But employers, the lenders want to see that's across, certain industries particularly.
We have a lot of expats who came in and they'll have sold their house in their original country, so they'll have that money sort of sitting. So some of them won't be that affected by loan to value ratios. I just wondered if there was anything like we should discuss around what's the ideal sort of deposit, or is there anything that you would be particularly keen to point out to expats?
Look, and this isn't necessarily for an expat. These lenders like to protect themselves. So any loan that is over 80%, they will charge a fee for the privilege of borrowing more than 80% of the value of the property. And that's called lender's mortgage insurance. So it's a one-off insurance premium. It's a one-off payment that goes into the coffers of the bank, which is historically would have paid for an actual insurance premium. And it still does in a lot of lenders' cases. With the big players, not so much. They just put it into their large coffers, and they take on the risk themselves. But with lenders' mortgage insurance, it's actually there to protect the lender if the individual defaults on the loan, and then that the lender has to sell the property. And if they're selling it at a discount, it's to cover the difference between the sale price and the discounted amount. So they actually recoup their loan. So it's purely a way of them protecting themselves. So in most circumstances, lender's mortgage insurance is something that we avoid for onshore clients. We try to as much as possible. For an offshore client, we can't actually, as a general rule, we can't actually go over 80%. So most expat loans tend to be 70 or 80% loans. And there's only a few lenders who'll do 80%, and some lenders are at 60. And the ones that tend to be at 60, you just know that they don't want international business, because not everyone wants it. There are some lenders who simply won't recognise an income that's not Australian dollars. It's earned in Australia and Aussie dollars. So not all lenders. So we look at 40 odd different lenders, and each lender's got, I don't know how many products and whatever else. So luckily software does a big part of that for us. But that 40 odd lenders goes to 15 lenders extremely quickly when you're starting to put foreign currencies in and taking out lenders who have what I class as extreme rules, which are barriers to entry, which just shows that they will do a loan, but they really don't want the loan. So they'll boost interest rates by 2%. Why? Okay, so they're really doing that so they can show that they're in the space, but they're not really in the space.
Right. Okay. And you mentioned earlier, obviously the interest rates are really low at the moment. Do you recommend certain mortgage types over other types?
Look, to be honest, most people will make a decision on whether I do a fixed rate or a variable rate based on their view of where the market's going. How can I beat the system? And unfortunately, most banks pay someone an awful lot of money with a far better education than most and far smarter than most of us at predicting where it's going to go, where interest rates are going to go. So it is extremely rare to have a bank make an error on a fixed rate versus a variable rate. So as we look at the market at the moment, you can get, an investment 3-year fixed rate at 2.5%. Whereas the variable rate is probably closer to 3 in most cases, or even over 3. And with that, so that's quite a sizable difference, and that's extremely unusual. But what that's actually showing us is most clients are in a variable rate, so the bank's making more money, but the banks actually don't think interest rates are going to go up for the next 3 years, in which case they've actually put a 2.5% rate in the market. So, to me, a fixed rate should be gone into not to try and beat the system, but to provide stability and security of repayment. So I know what the repayment's going to be. I'm comfortable with that level. If interest rates go down, hey, they go down. I don't get as much, but at least I've got that security. Yeah. And we're in an unusual position. It's extremely unusual to see a 3-year fixed rate lower than a variable rate. I've never seen it before. So this is a very unusual position. But that's been driven by government bond rates, the Reserve Bank buying 3-year bonds from the government and all these things. So there's many, many factors that are indicating, and the Reserve Bank has been very, very clear that they don't believe the Australian interest rates will increase for 3 years. So they've come out on many occasions, particularly recently, where the money markets seem to be testing that, especially in Australia. They're testing to say, well, we think the Australian market is recovering and the economy is recovering far quicker than everyone ever imagined. Interest rates are increasing, exchange rates are increasing. So the Aussie dollar to the US dollar has increased 35% in 12 months, which is massive. Yeah. It's a huge change. So will that keep going? What's predicted, etc. So there's many factors in it. But for me, when we spend a lot of time with clients looking at fixed versus variable, in many cases we blend fixed and variable. And the reason we blend is that you can't have an offset account on a fixed rate. You can only offset a variable rate. So depending on the client's circumstance, we'll actually define how we structure a loan.
Right. And the offset is obviously a good thing to have, I would have thought.
Yeah, I mean, like everything, you pay for it. So you can have, a lot of clients have an offset account. Some we just have a redraw account. You have to investigate the tax-wise situation and the purpose of what you're going to use the money for. So, with some clients, if they're buying one investment property and they're going to just have payments going through, a basic loan that doesn't have a fee of $395 a year is perfectly adequate. And most people are savvy enough now and with technology to do online transfers and everything else quite easily. So if you are and you're that comfortable, then why pay $300 a year, $400 a year nearly, for something you don't really use quite as much, or you don't get quite that benefit? So everything's an individual sort of decision. In some cases, we might be able to get a much better interest rate because we're in the packaged loan and we're willing to pay $395 to get the better rate. So it depends on the loan amount, depends on the circumstance, and it also depends on the long-term position objective of the client. So, are they planning to move back in a few years' time? So if someone was wanting to move back in 12 months and we put them in a 3-year fixed rate, we then wouldn't have the option for 3 years to convert the rate to an owner-occupied instead of an investment loan, which would be cheaper. So we have to assess many, many factors in getting to a position where we're comfortable and the client's comfortable that we've made the right choices for the right reasons.
Yeah, no, it's obviously detailed to each individual case.
Absolutely. And there's so many factors that go into that decision, not just trying to beat the bank, trying to make it cheaper.
And some of our arrivals would be needing to get FIRB approval.
Yes.
Are you able to explain a little bit more just around what that is?
Foreign Investor Review Board. Well, with a new arrival, it would depend on whether they're here, what visa they're on. For most people who've come over on a permanent residency visa, they don't need Foreign Investment Review Board. So Foreign Investment Review Board was created maybe a number of years ago, possibly 9 or 10 years ago, maybe longer, I don't know. I'm trying to think. But it was created as a methodology of slowing the Australian property market when so many foreign investors were investing in Australia. So you had a situation where the number of people in China that were buying properties in Sydney was just off the planet, and same with Melbourne, and that goes back 15 to 20 years. So there was a point in time where the government decided that the market was getting too hard for your young Australian to buy the dream home or the first property and get a foothold into the market. So there were some barriers put in place for foreign investors, and that was one of the barriers. The state governments then decided, because that's a federal tax and is seen, there's a load of rules around it, but it's seen as obviously it's federal. So the state governments then said, wait a second, we're missing out here, because it did affect the market, but with a lot of people, they're quite willing to keep going and keep buying. So the state government said, wait a second, perhaps we should just increase, so we get to charge stamp duty, so let's have a stamp duty excess, so a foreign buyer's stamp duty. So the state government's got on the act and actually then, implemented their own rules there. So there's a double whammy for some foreign investors. But if you come over and you've got a permanent residency visa, then, there's one of the reasons why it's potentially a better option to do it once you're here, not necessarily before. And this probably goes back to that fascinating position that we're in with COVID, of we are starting to see some people relocating to Australia or relocating back to Australia and buying, where they have foreign contracts. So they're still employed by their employer, whether that's in Singapore, Hong Kong, London, New York, wherever it might be. So they still have foreign income, but they're actually buying an owner-occupied property. And that's something that we've never really seen that much before. You used to get one or two, but we're now getting multiple, many cases of that happening. So, and that introduces a whole layer of complexity into a loan application and a situational position. So, yeah.
Yeah, that's an interesting one. I bet they're fun putting them to the bank.
Yeah, it's. I think banks are getting more used to this. The one positive, and if you can call it a positive, is with a loan application that is submitted to all lenders, if there is a foreign currency involved, it goes to the most senior people. So you don't tend to get a junior assessor assessing a complex loan. So any foreign income is seen as a complex loan application. So it usually takes a bit longer. But generally speaking, you're actually speaking to an assessor who has the experience and has the knowledge that when you explain something, that they actually understand it quite clearly, and you can talk their language, and you can put it in a position where they go, oh, okay, that's reasonable. And they're also senior enough to make reasonable decisions. So with assessors, the more senior they are, the more decisions they can make without reverting or referring up to someone more senior than them. Yeah. So all of these things make quite often an application for a multi-million-dollar purchase for someone who's living overseas and earning money, blah, blah, far easier than, your 25-year-old couple both earning, not a lot of money, trying to buy their first home with a 95% loan. That's 10 times harder for me, because I don't do many of them probably, but that to me is a lot harder. And from an assessor perspective, they will look at that far, far closer than they will an overseas loan. So it's fascinating, it's very different. But it's also the experience of that assessor. It's really
interesting. I never would have thought about that angle before, but I suppose it does definitely have its benefits. I feel like it's also the benefits also come too with the bigger organisations. So I won't name any names. One of the big four banks, they probably only have 6 or 8 really senior assessors who will do an international one. So from my perspective, you actually have a relationship with these people. And I had a very funny conversation with an assessor from one of the big banks the other day who rang up to discuss a particular loan application. And the assessor's going through what everyone else is going through. They're working from home, they're not having much human interaction, etc. And this lady, she rang up and we had a 10-minute conversation about how life was before we actually talked about what it was, because I hadn't spoken to her for probably 6 months because I hadn't used that lender, because we hadn't had that situation that would fit the lender. And she started with, hey Adam, how are you? Haven't spoken to you for anything. How's business? Yeah, business is fine, but how are you? How are you coping with not going into the office? And we had this, normal everyday conversation. They're normal people. But it was quite funny, and we're having that much more because they're not sitting at a desk getting hammered by people, and it's a very different. So that side of what we do is probably increased in its enjoyment, if there's a way of putting it. It's quite different. Yes, no, definitely. I think it's always nice as well to be chatting to people and their sort of family are milling about in the background sometimes, and you just see that whole different aspect.
Dogs barking in the background, and yes, all sorts going on. It's
you wouldn't have definitely got before, eh? I think I'd love to get into what differences there are by state and lots of expat stories that I'm sure you have. So I think we're going to have to get you back on for another session, another day, I think.
Happy to, no problem at all.
And we will put your details in the video link. But I thought if anyone's listening that has any questions and they want to reach out to you, what is the best way for them to contact you?
Go to our website, which is www.australianexpatfinance.com. There's a question in there, just flick me a message. Adam at that works as well. And so we try and be as easy to find as possible.
Oh, thank you very much for your time. I really appreciate it.
Pleasure. Anytime.